Good morning. Let's do that again because I miss speaking to a young audience. Good morning, guys. Can I say hi? I see some friends. Before I start, I want to just have a special mention to someone who has been a very fearless leader in this space. Let's give another round of applause to a good friend of mine, Patch Dulay. Are you still here? Okay, you're amazing. Okay. So today, I'll be having 3 parts, and I'm gonna try my best to squeeze it into 10 minutes. A guide to funding has 2 parts, and the last I'll end with how to get investors to say yes. Okay, next slide. Okay, so I think you're all familiar with this slide. And the very first obstacle any entrepreneur will have to overcome would be what they call the valley of death. Can everyone say that? The valley of death. And today we'll be touching a bit on these things. Next. Okay, so what we do, I think they mentioned this already, so I don't need to. Next. Okay, just a little idea. I started quite young. I think I started putting myself out there, and I was very brave in talking about the things I wanted to do and what I wanted to be. And along the way, those things change for an entrepreneur. But what shouldn't change is our courage to be out there, to make mistakes, to be criticized even sometimes. And so currently, MFP Group, after almost 6 years, we're present in 9 countries and 18 cities. We focus on 3 sectors. I'm not going to go through all of them, don't worry, but we're focused on the healthcare sector. We provide medical equipment. We are also involved in the financial services. And the more familiar one, and one thing that I know you all love, is F&B. So if you're familiar with Mimi and Bros, that's a homegrown brand we have in BGC. La Lola with churros, we're the strategic partner that is taking them global. And Salad Stop, okay, which is being managed by an incredible team here in the Philippines, but we are the strategic partners to take them. We've taken them to Europe, starting off with Spain and Vietnam. Okay, next. So this is where I'm more involved in, and if you see the funding life cycle, you have startups, early stage, growth stage, and mature stage, and we tackle the growth equity territory, which is an overlap of PE and venture capital, just to give you an idea. Next. Okay, so here are some stages of venture capital, and I'm going to just read them. So firstly, it's to find the talent and to find the investors. Next would be accelerator stage. That's when investment in companies happen. Initial stage. The seed stage would be when the company has an early product or typically pre-revenue. And Series A, when the product already has a market fit, but I'll move more into details. Next. Okay, just to give you the difference. So the difference between a private equity buyer and a strategic buyer. I hope you don't get bored. So private equity buyer invests in management teams. So this is more for the growth stage. A PE buyer generally is interested in keeping management teams in place and growing and supporting management teams. Sometimes even completely changing these management teams. Okay, now a strategic buyer is more interested in terminating management teams. There you go. And strategic buyers have different investing philosophies. Okay, next. Okay, if you have your phones, I'd like you to visit real quick this site, and if you can just Google fly spaces really quick on your phones. and keep that there. Explore the page. I think this is one of the investments MFP has made a couple of years ago. Fly Spaces is Southeast Asia's largest marketplace for flexible office space, and it connects businesses across the region. So instead of renting out spaces when you have your business, Fly Spaces can give the solution for that. So this is an article released by Forbes about Fly, and the company raised $2.1 million, the biggest Philippines-based pre-Series A investment. This was as of 2017, and that's the CEO of the company, Mario Berta. And he's also a wonderful speaker, and we're very proud of how he has been leading the team. Next slide. So Fly Spaces also was dubbed as the Airbnb for workspaces. Okay, next. And here's a quick video so that we learn how confident also a CEO or an entrepreneur should be when pitching. Please watch. They don't want to hear Mario Berta speak. Will it work? Are we good? Okay, so I think I have a few more minutes. If you can prepare the video, and I'll just get back to it later. Okay, he's Italian, so they're very, very confident, but he's amazing. So we'll get back to the video later towards the end. Next slide. Yeah, later. Next slide, please. Yeah. Okay. So here's the first part. Startup development stages. I'm going to go through them. It would be good if you could take a picture and just follow through your phones. So the first development stage would be, of course, when the entrepreneur has an idea. Potentially, the idea is scalable. It's a scalable product or service. This means you have an indication of how it will create value. Okay? The second would be concept. That means you've defined the mission and vision. You have your initial strategies in place. You have your key milestones in place. And you've really thought about this for the next few years. And also, this is a stage where you're really studying about how to attract your initial team with complementary skills. And that's when you have an ownership plan. The third would be commitment. Okay? And commitment is when your initial product has been created, you already have resources to develop it, you are a registered company already, you have shareholder agreements signed. Okay, I have made quite a number of mistakes, and if there is one agreement that can avoid lawsuits, okay, it's better to know this as early as now. It would be the shareholder agreement. Okay? Milestones are created during the commitment stage, and this also includes team commitment. Like Patch shared earlier, it's about getting a personal time commitment of the people you're going to work with. The fourth would be validate. Now this is interesting because this is when you can test your product. This is when you can tweak it, modify it, demonstrate initial user growth or revenue, and in a nutshell, it's when you can begin to attract additional resources. And validation means you are capable of raising money and you are capable of raising funds. The next would be scale, and this stage focuses on measurable growth. Okay? That's when you have customers, you have revenue, you're starting market traction. And that's when you start hiring staff. You start improving the quality of your product. So that's the scale stage. The next would be establish. Okay? The established stage is when you've achieved significant growth that can be expected to continue. So this is when you can easily attract investors. Okay, next. Okay, so this is also a very good slide to keep in mind. This is the startup financing cycle all the way to when it's more mature. And if you're lucky and you've been consistent with your revenues, you can even reach IPO or engage with a private equity firm if that's your goal. Okay, next. Okay, so this is the second part, progression of funding options. This to me is very, very interesting. Is that okay? Can I have 3 more minutes? Yes? You're not bored yet? No? Yes? Okay. So progression of funding options, what this means is at different stages of an entrepreneur's journey, there are different attributes that are important to attract capital. And if you plan to be an entrepreneur and a CEO of that business, keep in mind the rest of your life, you will be dealing with investors. You will be raising capital in different forms. And that's what I want to show you today. Next. So this is the progression of raising capital. Okay. Now it starts with angel investment or seed funding. And you can read through this slide. It's very, very simple. I love this slide, but I'm going to go through them. So angel round, in a nutshell, is one of the first, a small round designed to get the company off the ground. And you get this from angel investors, you get this from angel groups, friends, and family. And pre-seed is pre-institutional. Pre-seed would mean below $150,000. A seed round would be between $10,000 to $2 million. And that's when the company is, okay. Equity. So equity crowdfunding, we have platforms, and that's what Patch Dulay also mentioned. They're working on, I think, their equity crowdfunding platform. In the space where we're more involved in MFP is private equity. A PE round is led by a PE firm or a hedge fund, and it's usually a late stage round. In this progression stage, less risky investment for investors because the company is more established. Okay. And the last 3, really quick, a convertible note also can do wonders. Okay. A convertible note is the in-between round of funding. Okay. So the power, the magic of convertible notes is really to hold over until you want to raise your next round of funding. Okay. Debt financing also, or the debt round. That's when the investor lends money and the company promises to repay the debt with added interest. Okay. And the last, next slide. Okay, so this is also a very, very clear slide, and please feel free to take a photo and do a lot of research. This helps with the progression of your options. So when you're a seed or a startup, these are your options when you want to raise some funds: early stage, growth stage, and your exit. Okay, so I won't go through them anymore. And the last part, next please. Okay, how to get investors to say yes. Okay, and I'm going to end with this. I have three items. One, investors will say yes if you don't make rookie mistakes. Meaning, don't pitch without researching about your investors. Know them really, really well. Okay, target the right industry, target the right geography, target the right stage of growth, and target the right investor. That's very, very important. It's about obtaining a warm introduction through a mutual contact or a personal connection. That also helps. And usually you attract the best investors during social events. There's a saying, if you're not networking, you're not working. Okay, and that's true. That's true for startups. That's true for entrepreneurs. If you're not going out there, getting to know people, then you may be missing out on opportunities. Okay. Importance also of timing. When you're pitching to an investor, is the investor listening to you? Is the investor receptive to you? Okay? Also, part of this, character. Character matters. Okay? Don't be too overconfident. And investors want their money to go into the growth of your business. So it's good to talk about what you need them to do for growth. In short, bawal mayabang, right? It's hard to attract someone to trust you with their money if you're overconfident also. Okay? Make sense? Okay. Second, sorry, next slide. Okay, so that's the first. Investors will say yes if you don't make rookie mistakes. Okay, next slide. Investors will say yes if you articulate how they can strategically help you in addition to just money. Okay? Now, don't just focus on your investors' money. Okay? Resources will follow. Say what's uniquely relevant about them to you, what attracted you to them. Pay close attention to the way the conversation unfolds over time. Okay? Also, this is also very important, not just for startup entrepreneurs, but for anyone in business. Quickly respond to their due diligence requests, right? If an investor asks you for certain documents and information and it takes you so long to get back to them, that means you haven't done your homework, okay? And that may lead to a no in the end. Talk about your momentum, okay? Your momentum to date, what have you done? And talk about the great people who have joined your advisory board, or the people you'd like to attract to join your advisory board, okay? And the third, investors will say yes if your numbers are compelling. Know your numbers, okay? Business basics. Are your fundamentals strong? Your revenue, your metrics, your margins. In a nutshell, profitability. Know it by heart. Ideas are a dime a dozen, but relentless daily execution is what really matters. Okay? Next slide. Okay, so can we play the video? You still want to see that video? Yes? Okay, let's put Mario Berta on.
Alright, so you actually received funding just this year, early this year, $500,000. I think other startups would also want to know, how did you convince investors to plop in this much money?
Well, my investors are with the mix between local investors. We have very powerful VCs here. There are not many, unfortunately, but the top one we have. And then we have a group from Singapore plus what we call super angels investors. It's a combination of things. It's a combination of when you invest in our it's called seed capital. When you invest in our phase, you take a very, very big risk. So you most likely bet on the entrepreneurs behind you, so me and my partner. And then secondly, you bet on the country, the market, and the business model, right? There are similar companies like us around the world operating, specifically in North America, but none of those companies currently operating in Southeast Asia.
And you're actually using that capital to expand in Southeast Asia.
Correct.
So you've been to started Manila, Cebu, Singapore, now Kuala Lumpur. So what are the challenges of expanding this way in such a short period of time?
Yeah, well, Southeast Asia has two challenges. First of all, it's not one unique market. Let's say like United States. Everybody from Los Angeles to New York, they speak the same language, use the same currency, same religion, nearly the same culture, etc. Imagine that we go from Philippines, 100 million people with okay infrastructure, to Singapore, which is...
Then here you say okay infrastructure. That's what the ICT law changes that.
I'm positive.
Let's give Mario Berta a round of applause. So he's doing a good job. He's trying all the time. Now, last 2 points as I close. Really, at the end of the day, an entrepreneur's job is 2 things. One is to focus on business fundamentals, and 2 is to make the company stronger, in a nutshell. An investor, on the other hand, I think good investors you'd like to seek out and attract are investors who are open and humble enough to say that they've made mistakes too. Every great investor should be humble enough to admit that they make mistakes too. And lastly, as I close, whatever path you choose, I wish you all the best. And remember, it's about turning a no into a maybe, and a maybe into a yes. And at the end of the day, you only need one yes. Thank you, everyone. Good afternoon.